The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Yeah, stock of the day is WiseTech Global, the logistics software maker, reporting a 28% jump in full-year revenue of $1.04 billion. Net profit rising 24% to $263 million. Its flagware software product, CargoWise, grew revenue by 33%, and it's announced it will launch 3 new products in the first half of this financial year. The company has declared a final dividend of 9.2 cents a share. That's up 10% on the previous year. It's now forecasting revenue of between $1.3 and $1.35 billion, with EBITDA to grow between 33 and 41% this financial year. And that big profit jump has sent its shares to a record high today. So let's get into some analysis of that stock. Henry, what did you make of it?
I guess, it shows a lot of things, really. One is that you could have bought this stock back in that rout on the 6th of August, around $83. So that's something to bear in mind next time there is a bout of volatility. Buying quality and buying stocks that are on your shopping list can really pay dividends, and of course the dividends up 10%. The results were better than expected, slightly better, and also alluding to a better second half as well. So an acceleration in the second half, these 3 new products coming on. What is interesting, I guess, is that when WiseTech first listed, they seem to be doing a acquisition every day, sometimes 2 a day. And there was a massive period of time when we saw acquisition from these guys. But it clearly has paid off. It's a $37 billion company now. It clearly has paid off. And, we're seeing that now. We've got a dividend up. The revenue was up 28%. CargoWise revenue up 33%, 19% of that organically. So you can see how this one has really come to dominate. And what is interesting is and I've read many articles on this in terms of the logistics chain, it is still paper-based in lots of places, and it's still very antiquated. So you'd imagine the opportunity is still there. Now, having said all that, you're paying, 2 weeks ago, you could have bought this stock for $83. Now you're paying $110 plus. So I hate to say the ship has sailed, but it certainly has left the port. And I'm not sure I'd be chasing it up here. I'm sure that we're going to get some neutralish comments from brokers tomorrow. So maybe we'll see a little bit of backing. But it just shows the power of having a shopping list and the power of looking through the volatility when you do get these flash crashes or yen carry trade, whatever you want to call it, whatever that unwinding was, it's gone now. At least for the time being, and you could have picked up WiseTech at $83. Here we are at 110. What's that? 30-odd%. I mean, how good's that?
Did you?
That's no.
Right. Not following your own advice, right? But did you see that opportunity when it presented itself?
I did buy a few things. I'd run small caps. 37 billion kind of falls outside my purview, I'm afraid. I did buy a few things. Ordinate when they dropped to $9. I bought some Polynovo and I bought some other stuff as well. But I must admit, WiseTech was one that escaped me. And obviously today it's 16% up. So the big rise has been today. Prior to today, it just got back to where it was before the big fall. But it just shows, I guess, in terms of how you handle volatility, if you have a plan and keep your eye on the horizon rather than getting bobbed about in the waves.
All right. So I take that as a whole then for you at this point.
It is a whole.
Andrew?
Oh, it's a quality business. I was fortunate enough to buy it in the famous Iran super fund, I think at about 10 or $11. And at 60 or 70, I went, how good am I? And sold it. So, which wasn't very bright. But with when you also, I'll sort of preface that statement with, and I'm looking at the current PE, it's currently trading at 94 times earnings. And we know that the market is trading at around 18 times earnings. So we then fall back onto Andrew's favourite, the PEG, whereby we're trying to find companies whose earnings are growing quicker than what their PE is. and forecast earnings for WiseTech prior to today was around 37-38%. So it's super expensive, super expensive, but they're delivering, and no pun intended, considering they're a logistics company. I'm here all day. So I don't mind it. Certainly Richard White, as they switched on going, I know Henry's spent a bit of time talking to Richard. You were pretty impressed with Richard, weren't you, Henry?
Starstruck I was, Andrew. Absolutely starstruck. I was fumbling for words. I was like a teenager at a Taylor Swift concert.
Or someone visiting Billund in Denmark and being surrounded by a whole lot of Lego if plastic is your thing. So certainly quality management. Richard has been selling down, and of course that's usually one of my tests of there being concern, but he's doing it incrementally, very slowly, really just creating additional liquidity. A number of the staff are actually given shares as well, and I certainly like the fact that when employees are aligned as well. So there's lots to like about it. The only thing I don't like, Andrew, is the price. So it's a hold. But certainly to Henry's point on any weakness, and if you sort of have your favourite shopping list of stuff that you want to buy when there's a bit of pressure on, this should be certainly in that view, in that list.
Yep. All right. So a double hold, buy on weakness, which, well, as Henry pointed out there, perhaps you missed a chance a couple of weeks ago. All right. That is our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.